Hi everybody, it's Mike with the Claim Squad Public Adjusters here again with another homeowner claim video. But today we're going to be looking at really my 5 best tips for what you need to look out for or what you need to have on your home insurance policy. So when you look at your home insurance policy, most people get it. Most people don't really talk with their agents when they get their policy. And unfortunately, most people don't know the coverages that they have. And I understand the reasons why. But let's go through 5 things that are most important things, and I'll add in a caveat to a few other little tidbits that you should look for within your policy. All right. So let's start with your deductible. So Florida residents, you're going to have 2 different deductibles. You're going to have a deductible for your basic perils, meaning water damage, vandalism, fire, things of that nature. And that's going to range anywhere. I've seen people have 500, 1,000, 2,500 seems to be the norm. I'm okay with any of those. But just make sure you don't get anything higher than 2,500. The second type of deductible is our hurricane or windstorm deductible. Now, some insurance companies may want you to get a higher percentage. So more than likely, most people in Florida have 2%, 5%, or 10%. All right. Just remember that the higher the percentage of the deductible, the less likely you're going to be able to make a claim, and or the claim is going to have to be substantial from a hurricane. So I know Citizens for a while in Miami, if you had any house that was worth anything over $700,000, they were requiring 10% hurricane deductible before they even insured you. And unfortunately, a lot of people had no other place to get insurance from, so they had to go with Citizens. My advice would be to get the 2% deductible. Pay a little bit more, get the 2% deductible. All right. One thing that has come to fruition most recently this year, July 1st of this year, 2021, there are new property damage laws in Florida. And it really only affects any new policy from July 1st moving forward. But really, these new laws were geared towards the roofing industry. To anybody who got a new roof from any type of tropical storm, got solicited by some of these roofers that come in the neighborhood saying, hey, we can get you a new roof. That type of situation. So what they were trying to do, both the Senate and the House in Florida, they were trying to put into a bill essentially a depreciation calculator when it comes to your roof. So if your roof is only over 10 years old, you get half the value, and then it decreases on what the insurance company has to pay you. Similar to what they have in Texas. I'm surprised Texas has this, but they do. So let's say your roof was 15 years old, and there was a table that would say, okay, 15 years old, it can be depreciated 70%, which means the insurance company only had to pay 30%, and then your deductible. Essentially, the insurance company would be paying hardly anything. Thankfully, that didn't pass. But anyhow, what I am seeing, some companies like Progressive are saying if you have a roof older than 7 years old, we won't insure you. That's completely ridiculous. I've heard of a couple other companies saying roof older than 10 years old, they're not going to cover you. What they're also doing, companies, Citizens, Universal, and others, they're trying to establish what the useful life of your roof is by saying, okay, so you have 3 years left of roof life. After that 3 years, they're going to drop you. So they're using everything in their power against these roof claims. So here's what I want to make sure that you look out for on your policy. That there's no roof limitation as far as years, depreciation factor when it comes to your roof after a certain point, and also any aesthetic limitations. Believe it or not, I've seen some policies where they limit the aesthetic part of it. Let's also go into the fourth type of tip I'm going to give you regarding your policy that you need to pay close attention to. I would say 80% of all claims that I handle that involve mold exceed $10,000. You heard me right. Exceeds $10,000. 80%. It might be higher. So 8 out of every 10 claims that I see where there's mold involvement usually exceeds the 10,000. All right. Unfortunately, here in Florida, policies are only covering and issuing policies with $10,000 of coverage. You may be able to buy more. I would recommend, if you can, buy up to $20,000. Okay. I think mold is just such a high occurrence type loss, especially here in Florida, and it's the number one type of claim in Florida, that it's worth paying a little extra money for, because if you have any type of situation that involves mold, then it's very expensive. People don't realize how little work it takes to get to that 10,000 and to exceed it. All right. Check your policy. Ask if there's any way you can increase your mold coverage beyond a 10,000. 10,000 is default and what comes in your policies. Finally, the most important point, the most important tip I can give you is policies around Florida are writing policies and coverages based on two different things involving water damage. And look through your policy, ask your agent. Number one, they are doing a water damage limit endorsement for $10,000. Any type of water damage you have, pipe bust, shower leak behind the wall, cast iron pipes, whatever type of water damage, toilet supply line, cracks, water goes all over. They're limiting it to $10,000. Also, the companion to that, at times I'm seeing people are opting in for a couple $100 saving for a water damage exclusion. Unbelievable. I'm shocked that some people would take a chance, and basically what you're doing is going naked with no type of water damage coverage, which is the number two type of claim behind mold. So, and then finally, my last piece of advice would be take a look at your checklist of coverages. I'm going to put an example up of one right now, and just go through things and make sure everything looks on par. They should give you a copy of this before your policy goes into effect. Okay? So I want you to look through that. And there's nothing really alarming, but what you want to do is look on the checklist of coverages and make sure there's a Y next to accidental discharge of water. All right? Make sure that the mold coverage, there's two columns. One will say additional, one will say included. So let me explain that really quick. If it says included, and let's say your dwelling, your property is insured for $200,000. And additional means that mold coverage of $10,000 is on top of that $200,000. Okay? So if it says included, that means that mold damage, $10,000 comes from that $200,000. Now you might say, what's the big deal on that? It can come back to haunt you in particular situations where you have a lot of damage. Okay? That's why I bring that up. You always want to make sure it says Y additional. Yes for additional, not Y included. Included takes away from your dwelling, and you don't want that. So, brief video, 5 tips, 5 pointers, 5 things that you really need to look out for on your policy. You really need to have included in your policy, and you really need to make sure that these things are being accounted for. You can't trust your agent anymore, so you have to do it yourself. I'm Mike with the Claim Squad Public Adjusters. Thanks for watching this video. Bye-bye.